Today, December 3rd, marks Consumer Day here in South Korea. That being said, we touch upon consumer prospects of the economy and more on Press Perspective today. Hello and welcome to Press Perspective. It's Tuesday, December 3rd here in Seoul. I'm Min Sunhee. Consumers in the country appear largely pessimistic about economic prospects amid much concern over the future course of the U.S.'s trade policy and its potential impact on trade partners, including South Korea. For more on this, I have Lee Ji-hoon, a correspondent for Reuters, here in the studio. Ji-hoon, welcome back.
Thank you for having me again.
I also have Professor Kim Yong-jin at Sogang University live on the line. Professor Kim, as always, it's a pleasure.
Good afternoon.
Right, Ji-hoon, we'll start here in the studio. Let's begin then with the definition, Ji-hoon, of the Composite Consumer Sentiment Index. And how accurate is it in assessing economic prospects?
Yeah, so the Consumer Sentiment Index, or CSI, is an indicator of how pessimistic or optimistic ordinary people feel about the state of the economy, based on the Bank of Korea's monthly survey of about 2,000 households nationwide. Yeah. The survey asks people about their economic assessments in various aspects, such as current and future living standards, future household income and spending, and current and future macroeconomic conditions. So if the index is above 100, that means people are optimistic compared with the average of last 2 decades. And if the index is below 100, that means people are pessimistic. And it also provides people's inflation expectations for the next 12 months, which is used by the central bank for its monetary policy, because inflation is often driven by expectations through people's spending choices and firms' pricing decisions.
Right, I see. Ji-hoon, I understand the index representing consumer expectations for economic momentum plunged. Could you tell us a bit more about this plunge and its implications?
Yeah, so last month the CSI fell by 1 point to 100.7 from 101.7, which was the largest fall in 3 months. To be clear, that is still above 100, so people are still optimistic compared with the past. But as you said, the sub-index for future economic conditions, that dropped to the lowest in a year, and the fall was the biggest since July 2022. For the reference, in July 2022, it was when inflation was at the highest in more than 2 decades at 6.3%, and that prompted central banks to raise interest rates aggressively. According to the Bank of Korea, the fall was because of the dollar-won exchange rate rising above 1,400 for the first time in 2 years, and the Kospi falling below 2,500 points, which was the lowest in a year. And that was because of the U.S. election result, of course, which raised worries about exports slowing down and the economy weakening due to U.S. tariff policies, according to the Bank of Korea. And when it comes to implications, this survey is often considered as a leading indicator for consumer spending, because it is how people are feeling about the economy right now. So, and it came after retail sales in Korea fell for the second straight month in October, with sales of durable goods such as cars and electronic products. They fell by 5.8%, which was biggest in nearly 4 years.
Right, I see. All right then, Professor Kim, speaking within your capacity as a scholar, how do you explain the plunging prospects for the Korean economy?
Well, Ji-hoon explained those kind of things very well. I mean, economy is just like a psychology, right? People feels like, oh, we're in danger, and they don't spend much. This is exactly what happened now. Basically, the drops in CCSI in economic outlook, they're reflecting growing concerns about the economic future of Korea, which is already fragile, with high inflation, high interest rate, and sluggish domestic consumption, and rising household debt. The fragile economic condition of Korea make it vulnerable to external shocks, such as economic policies of the president-elect Mr. Trump, because Korean economy depends significantly on export for the economic growth. And Trump said he would impose tariff on Chinese product up to 60% and additional levies from 10 to 20% on goods from other countries, including Korea, and even Canada and Mexico, which are known to be the strongest allies of the U.S. His approach to tariff protectionism and trade wars has fueled the fears of adverse impact on Korean economy. And in addition, Trump's stance on Chinese semiconductor industry will impose another threat to Korea's economic growth, because Korea has been a major exporter of semiconductor to China. In the morning, it was reported that the U.S. will prevent HBM, which means high bandwidth memory chips, which is used for AI development, from being exported to China. And the Korean semiconductor manufacturers like Samsung Electronics and SK Hynix will be affected the most. Any attempt of Trump to press Chinese tech sector could directly impact Korea's trade. A decline in export would likely suppress economic growth of Korea and further dampen domestic consumption. So these are the factors that caused fears of economic recession or downturn in Korea.
Right. Ji-hoon, as Professor Kim has mentioned, Korea, of course, it's an export-driven economy. And according to your report this week, Korea's export growth slowed to a 14-month low in November, you wrote. Could you tell us a bit more about your coverage?
Yeah, in November, export growth slowed for the first straight month and to the weakest in 14 months, with the growth rate at 1.4%, which is compared with 2.8% expected by economists. By country, exports to the United States fell 5.1%, which was the first decline since July 2023. And economists say exports to the United States are slowing down due to uncertainty over tariff policies. As President-elect Donald Trump said last month, he would impose tariffs on Mexico, Canada, and China, and which is also expected to affect South Korean firms running factories in those countries. And exports to China also fell 0.6% last month, which was softer than the decline in U.S. shipments, but still it was the first time in 9 months they fell. So by product, semiconductor export growth slowed to the lowest in 11 months, and car sales fell by the most since mid-2020, when the COVID-19 disrupted supply chains. So economists say export growth is expected to slow further next year due to U.S. tariff uncertainty. And according to Korea International Trade Association, KITA, export growth is expected to fall to 1.48% next year, compared with 8.4% this year.
Right, I see. And Professor Kim, given the findings thus far, do you suppose domestic consumption is only likely to weaken further then?
Yeah, absolutely. Unfortunately, absolutely, the domestic consumption will weaken further in the next week. Like, Ji-hoon explained, the export won't be good. Actually, last Thursday, the Bank of Korea lowered its outlook for South Korea's economic growth this year to 2.2%. And it's forecast for 2025, next year, to 1.9%, which was 2.1% in August, due to slowing export growth and weak domestic demand. Based on the weak growth outlook, the BOK unexpectedly cut its base interest rate by a 0.25 point to 3%. Like I mentioned earlier, Korean economy has been suffering high inflation, high interest rates, sluggish domestic consumption, and rising household debt. In addition to this, basically the Trump expected approach to tariff and protectionism and trade wars will negatively affect, Korean export, which is the key growth engine of Korea. So basically, until the dust is settled down, domestic, consumption will become weaker and weaker till the first half of next year.
Right, it sounds really gloomy. Professor Kim, as you mentioned, household debt ballooned to its highest in 3 years in the third quarter of this year. And perhaps partly responding to this, the central bank lowered its interest rate for the second straight session last week. That being said, Professor Kim, when can we expect to see the impact of lower interest rates, do you think?
Well, as you mentioned, the Bank of Korea unexpectedly lowered interest rate, by a 0.25 percentage point to 3.0, right? It's quite surprising. Most experts, had predicted a rate freeze ahead of the meeting, considering the $1 exchange rate, which surged above, 1,400 won per dollar, and a tremendous amount of household debt. According to the Bank of Korea, household debt in Korea reached an all-time high in the third quarter of 2024 due to rising, home prices and household loans. As of September, the balance of household credit stood at, of $1.4 trillion with an increase of $18 billion from the end of June. The BOK's decision may reflect, growing concerns over an economic, slowdown, even though it's under the condition of stable inflation rate at around 1%, and a slowing household debt increase. When the rate cut will be effective, I think it's really tough to predict, considering all the geopolitical situations surrounding Korea, the unpredictability of Trump's economic policy, and domestic, condition. However, it is well understood that it takes at least 6 months for any policy to have a meaningful effect on the economy. If the rate cut by the central bank would not affect the foreign exchange rate and the household debt further, and geopolitical issues are eased a little bit more, it will have some effect on the economy, less than 6 months, I guess.
All right, so I suppose we'll have to wait until the first half of next year then. Ji-hoon, are Korean consumers alone with regard to their pessimistic prospects about the economy? I mean, what are the prospects about the economy outside of Korea?
Yeah, actually, yesterday we had PMI data from all over the world, which is a survey of the manufacturing sector. And it showed factory activity shrank in Europe sharply last month as demand was weakening across major countries such as France and Germany. In the United Kingdom especially, the contraction was the sharpest in 9 months due to weakening demand. And according to our survey, about 85% of economists expect Trump's tariff policies would be implemented from early next year, and would have a significant impact on the European economy as well. In China, however, manufacturing economy picked up last month to the fastest in 5 months because, and that was thanks to recent stimulus measures rolled out ahead of Trump's presidency. Analysts say China's stimulus measures are having some effect on its consumer demand and the property sector, and there are some signs that the Chinese companies are shipping their stocks to major markets in advance before Trump takes office. And China's pickup also helps some Asian countries like Korea and Taiwan a little, but in Japan, manufacturing activity weakened by the most in 8 months because demand was weaker domestically and abroad. In the United States, meanwhile, the manufacturing sector shrank for the 8th straight months, but the decline was softer than the previous month. Still, manufacturing firms, they said they were concerned about inflationary pressures that could come from Trump's tariff policies.
Right, and staying with that, as Ji-hoon just mentioned, Professor Kim, a growing number of scholars have said that Trump's tariffs will spark inflation. That being said, what are the risks of yet another global inflation upon the return of Mr. Trump to the White House?
Well, as Ji-hoon explained, the global economy is not very good at the moment, and then this will lead to economic downturn. So what that means, we won't have global inflation. But I think, the instability of global economy will spark inflation across the world at any time. In particular, supply-side price hike or supply-side price increase may be the key factor for disinflation. When it comes to the Trump policy on protectionism, tariff, and trade war, these policies may cause a serious inflation to the U.S. economy. Other countries, including China, EU, Korea, and Japan, will suffer economic recession with the pressure of supply-side increase due to the Trump policy. And probably, Mr. Trump would understand the negative effect of his policies. He might use the announced policy approach to get better results from the future negotiation with other countries about his agenda. So probably there is a kind of risk of U.S. inflation very high, global inflation is a little bit low.
Right. Ji-hoon, there has also been quite a bit of foreign media coverage about Samsung Electronics shares falling to over 4-year lows in recent times. What concerns have been covered?
Yeah, as I said earlier, the Kospi fell last month to below 2,500, and that was mostly led by Samsung Electronics because it accounts for about 15% of the total Kospi market. And last month, Samsung Electronics shares fell below a psychological level of 50,000 won. And that was the first time since mid-2020 and when the stock market was hit by the COVID-19 pandemic. This year, there has been a boom in semiconductor stocks with SK Hynix rising 12%, NVIDIA rising 180%, and Taiwan's TSMC rising 75%. But Samsung Electronics, it has been the worst performer with its stock price falling about 30%, which is likely to be the biggest drop in more than 2 decades. Analysts say Samsung has been lagging behind its peers in the race for advanced chips, such as HBM, as Professor Kim mentioned earlier. And its chip profit dropped 40% in the third quarter, which Samsung said is a crisis and apologized. Analysts also say Samsung's reliance on China is heavier than its competitors, which makes it more vulnerable to Trump's tariff policies.
Right. And Professor Kim, keeping this in mind, what do you suppose is the future for the Korean economy as we move forward? I mean, the Bank of Korea, as Ji-hoon mentioned earlier, has forecast a 1.9% growth for the year 2025.
Right. To the Korean economy, these big companies are kind of kingpins. So we have to think about the domino games. If these big companies fall down, then Korean economy will be badly hurt. So basically, if any big companies gets in trouble in Korea, it will very negatively affect Korean economy because Korean economy depends on the performance of big companies a lot. Lotte Chemical has not been performing very well recently due to oversupply from Chinese competitors. It was at the brink of event of default recently, right? Due to the operating profit lower than promised to creditors. which might cause liquidity problem to the company and its business groups. And Samsung Electronics suffered lack of innovation and loss of technology leadership in high-end memory chips, which led to the worst performing stock among global chip markets, like TSMC, chip makers, like TSMC and NVIDIA this year. Two cases show that Korean companies are facing serious challenges from outside competitors and by technological advancement in other countries. If these big companies are not performing well, Korean economy will be affected very negatively in terms of economic growth and prosperity.
Right, I see. Ji-hoon, in the meantime, what are some other economic indicators to keep our eyes on?
Yeah, so as Professor Kim said, when the Bank of Korea lowered interest rates to 3% last week, it said it would continue lowering rates next year, but it also said it will watch the foreign exchange as a key factor for monetary policy. And today, after inflation data came out, the Bank of Korea also said inflation is expected to be around 2% for at least some time because of high exchange rates. So going forward, the dollar-won exchange rate will be one of key factors for inflation and monetary policy, which will also affect consumer demand here in Korea.
I see. So we'll have to keep our eyes on our foreign exchange markets then. All right, Ji-hoon, thank you very much for your insights today. And Professor Kim, thank you so much for your time and your thoughts.
Thank you for having me.
Right, well, that is all the time we have for this edition of Press Perspective. We return same time tomorrow with a panel session on Korea's defense industry.